So we aim to do a second one, depending on the success of this, of course, that will probably be at 500 million in terms of value. And then, all being well, we'll probably push towards a billion, which seems crazy figures really to discuss, but there is a need and a shortage, and that can be done. I'm very confident of that.
Hello, you're watching Proactive. Joining me is Oakmount Partners Managing Director, Glenn King. Glenn, great to speak with you again. And since we last chatted, there's been a few developments at the company, including the issuance of your first listed bond.
Correct. Yes. Good to speak with you again, Stephen. So we, in sort of the natural endeavours of our business, we're growing in scale quite significantly, and we have been for pretty much the last 18 to 24 months. But part of that scale is it was always the ambition to move into or continue growing our fixed income arm. So we've now got the issuance of our first listed bond, which will be for a value of 350 million, priced out in US dollars. So that bond itself will be solely for the property market. And we've pretty much got a four-pronged approach to that. So part of the portfolio covers social housing. So we've got the government subsidies, the government income that underpin the coupon payments. So we've got that security, which is highly important for us as a business. But of course, second to that, we've got our traditional buy-refurbish-refinance deals that we do. And as part of that, we're in the process of acquiring some commercial properties at the moment that will probably turn into residential. And then as we do that, we've also got the development arm. So we'll be building properties from the ground up, usually sort of mid-market prices, 400,000 to 500,000 plus, which will include luxury properties as well as some social housing, brand new developments. And then finally, we've got our Park Home. We've just signed a JV with a large company in the UK that I'll disclose in another interview, but we've just signed a JV with them. And that's for park homes all within the UK. So our portfolio across those four key sectors stands to be very, very significant. And it's a really strong fixed income vehicle for our client base and, of course, new clients coming into the brand.
And of course, with that social housing focus, you must have government support behind you as well.
Correct. Absolutely. That's one of the main appeals with it because, of course, with the natural shortage, or the national shortage rather, of the properties here in the UK, there's so much strain within the property market that, we're having to go to greater extents to acquire properties in order to house people. And of course, with the shortage, we are able to fill the gap to a degree. Again, we've got our JV partnerships already in place with a company up in the Midlands that have got circa 1,000 homes under their care. So we will, going forward, be buying the bricks and mortar. We'll obviously scale the value in the buildings that we will hold long term, 5-10 years plus. But of course, the government subsidies, government income underpins everything. So we're very privileged to have that in place.
How does this complement your strategic partnership with T3 Life that was announced last October?
Yeah, so T3 has been in the background. So this is slightly separate actually from T3. They've got their own sort of portfolio. They're based across in Ireland, of course. But with what we're doing, this is a standalone project with our new JV partners within the social housing element. So this is a standalone vehicle and it's likely to be the first tranche of our listed bonds. So we aim to do a second one, depending on the success of this, of course, that will probably be at 500 million in terms of value. And then, all being well, we'll probably push towards a billion, which seems crazy figures really to discuss, but there is a need and a shortage, and that can be done. I'm very confident of that.
Glenn, when we last spoke, we chatted about the acquisition of an independent consultancy firm, which you told me brought expertise in investment management and compliance. So really enhancing your sales capabilities. How's that progressed?
Very good. Yeah, so everything was sort of signed, sealed and delivered and was effective from March 1st. Everything from an agreement perspective is fully complete now. And yeah, the business is growing. Our sales arm in particular, it was an area of the business that we were somewhat exposed in. We didn't really have a strong sales arm because it wasn't needed. But of course, with the accompaniment of what we're doing with our own bond and stuff, it was imperative that we had our own sales floor that we could rely upon and focus on the compliance and the growth of that. And everything has been really, really buoyant and has started with a spring in its step. So we're really very pleased with how progress is being made.
Glenn, could you also give us an update on your investee company, Intergroup Mining? Are they still planning to list on the TSX?
So the TSX, no. The Nasdaq, yes. And that's a change that came about only actually fairly recently. The route to market with the Nasdaq was actually much quicker. So with one of their previous updates that went out, I believe in mid-April, I think, they notified the broader market that they were going onto the Nasdaq, and there would be a lead time frame, if you will, for listing of approximately 90 days, give or take. Because of course, once it's with the stock exchange, it's down to them to give you the listing date. But the company itself, Intergroup, is in very good stead. As of this month, I believe all of the last of their debt is cleared. And of course, as they near production or full-term production, the listing, it opens them up to significant post-listing capital, which will really put the company in good stead because they've been able to build out their metakaolin plant. They're able to produce plant with their own material and grow it out significantly. I think with the overall aim of probably turning over somewhere in the region of 1 million tons of ore per annum, with a significant profit margins. So the company's in really, really good stead. And
How about your own listing ambitions, Glenn?
good question. That's not changed. We're still definitely doing that. We're nearing PLC status as discussed previously. That's coming up very, very shortly. And then once we've done that, we've already opened up the discussion points for a near-term listing. In an ideal situation, it would be probably late Q3, early Q4 of this year, that being 2025. However, if we rolled into 2026, that's no problem. It just means that our armory and the strength of the brand continues to grow. So we're in very good stead.
And you're about to open up your first office in Dubai. And last time we spoke, you were also eyeing Singapore. Is that still on track?
Everything's still on track. Dubai, I shall be in Dubai in the next couple of weeks, purely and simply for looking at properties to house our international sales arm there. So we're ahead of the curve really on the Dubai growth plans, and then Singapore will come late this year, 2025, or Q1 next year. But of course, both key areas for us. We've got the Asian market that we cover, and of course, the Middle Eastern market is a really buoyant, strong market, and there's a lot going out there in Saudi. Saudi is also a consideration for us presently, whether it be in Riyadh or elsewhere. But it's a really key area for us to focus upon.
It sounds like you have a lot on the go at the moment, Glenn. I hope you'll continue to keep us updated on your progress.
Absolutely. Look forward to it. Many thanks, Stephen.
And to you, Glenn King, Managing Director at Oakmount Partners.